A Bitcoin ETF. What is it? Why is it good? Why is it bad? Let's go. So an ETF is an exchange-traded fund. Look at it as a way of owning a particular asset without having to have direct exposure to it. Good examples of this would be gold, oil, gas, because you wouldn't want to hold the physical product and maintain the storage on them, but it is very easy to have something on paper saying that you own a certain amount of it. So in short, an ETF is good because it makes it super simple for traditional funds to flow into an asset. However, the current ETFs that are being approved or are approved are futures contracts based. They're based in the CME or the Chicago Mercantile Exchange. And having a futures-based ETF just allows it to sell at a premium during a bull market and at a discount during a bear market. This opens up huge opportunities for hedge funds to arbitrage it. Arbitrage simply means that they're buying and selling the assets at the same time in different markets, taking advantage of slight differences in those markets to make up the difference in profit. Now you might ask yourself, why are they doing this? This sounds an awful lot like the Grayscale Bitcoin Trust. Well, the answer is always money. They get to make a lot of money just out of constructing an ETF. Here's everybody involved. The ETF providers get a slice of the pie. The arbitragers get a slice of the pie. Lawyers, administrators, auditors, all of the fund get a slice. So for that reason right there, that's why I'm a big fan of owning the asset directly. Nobody gets a slice except the exchange, and they get a very tiny amount. If you go with an ETF based on a futures contract, everybody else is getting a small slice of the pie as well. And the interesting thing is, people are going to figure this out. There's going to be somebody that owns Bitcoin outright. And there's going to be a brother, a sister, a friend, a parent that owns the ETF. And they're going to say, hey, this last year I made X amount of dollars. And the people that own the ETF are going to be like, well, why did I only make 1/3 of that or half of that? The answer is because of all the bullshit bureaucracy in between. If the SEC truly cared about the investors, they wouldn't allow these financial products to even exist. But we all know money speaks. So let's do a little recap. A Bitcoin ETF, regardless of it being futures-based or spot-based, is good because it allows traditional money to flow into the Bitcoin space. It's bad because it really allows hedge funds to further manipulate the market, which means you, the end consumer, get less. But it's good because it paves way for the likelihood of a spot-based ETF to be on its way. In the past, it made sense to have ETFs for agricultural goods because those would obviously spoil. You can't just store. Gold, gas, oil, those are difficult to store. But now we're in the digital age and they're just grabbing their share.